Hi friends, in this video we will be discussing about one more interesting multi-candlestick pattern, that is Harami pattern. So let us try to understand some of the important points about this pattern. Friends, to define Harami pattern on chart, so we need at least two candles. Okay, so here you could see this is how Harami pattern looks like. Okay, it's a two candlestick pattern. Okay, now let us try to understand this point. Candle C1 should be long and candle C2 should be small with opposite color of C1. Okay. So friends, let's elaborate this one. As we have said, Harami pattern is a two candlestick pattern. So let's suppose this is a candle C1. Okay. And this is candle C2. If you see this pattern, the previous candle C1 is a red candle, which is a bearish candle, and candle C2 should be a small candle, where if you clearly notice that C2 candle real body is within the candle C1 real body. Okay, so if candle C1 is a bearish one, candle C2 should be a bullish candle with a small real body. So the same thing applies here. If you see here candle C1, which is a long candle, candle C2 here, it is a red candle which is opposite to the previous candle. Okay, a pattern which satisfies these rules, okay, then we say it as a Harami pattern. So friends, basically this pattern should appear at the bottom or top of the trend. Okay, so it depends on where actually it appears. We have a bullish Harami pattern and a bearish Harami pattern. So we'll be discussing in detail about those two patterns. Alright, now let us try to analyze this bullish Harami pattern. So friends, to satisfy a bullish Harami pattern, the previous trend should be a downward trend. Okay, this is the first rule for a bullish Harami pattern. So as we have discussed earlier, for a bullish Harami pattern, the candle C1 should be a red candle which confirms the bearishness. Okay, and candle C2 should be a bullish candle with a small real body. Okay, so now let us try to understand this point in detail. So since it's a bullish Harami pattern, the previous trend clearly it is a downward trend. Okay, and at this point friends, so this is a pattern, right? This is a Harami pattern. If you see here, this is a candle C1. Okay, and this is a candle C2. So what actually happened here is candle C1 is a bearish candle, which again confirms that the market is in a downtrend. And if you see candle C2, the open price of candle C2 is higher than the close price of C1. Okay, and closing price of C2 also lesser than the open price of a C1, right? So friends, at this price point, what actually happened? There is a bullish candle formation, which indicates that there is a buying interest at this price zone, which resulted in the formation of a bullish candle. As it was a previous trend before, suddenly at this price point there is a bullish candle formation, which gives a signal that buyers entered into the market and there could be a trend reversal, right? So if you clearly notice, candle C2 real body is within the real body of C1, which satisfies for a bullish Harami pattern. So expecting the market to go for higher levels of from this level. Okay, so if I want to take a position based on the bullish Harami pattern, so how can I take, friends? The close price of candle C2 should be my entry. Okay, assuming that there is going to be a trend reversal in the market, right? So I'll go for a long position at the close price of candle C2, and my stop loss would be the lowest low between candle C1 and C2. So ideally, real body of candle C2 lies within the real body of C1, but in chart we have some lower shadows. Even the candle C2 might have the lower shadow compared to the C1 also. Okay, so the stop loss would be the lowest low between C1 and C2. So taking a position based on a bullish Harami pattern is completely depends on the risk appetite of a trader. If I'm a risk averse trader, then what I will do, friends, I will not take a position looking at this candle C2, but I will wait for one more trading session to give a confirmation signal. Okay, then I'll take position at this candle a close price. Okay, so if we clearly notice in bullish Harami pattern, when there is a bullish candle formation after downward rally, it is still showing that the buyer's dominance is comparatively less as it forms a small real body. Correct? If we can remember the engulfing pattern, in that bullish engulfing pattern, we have seen that the candle C2 engulfs candle C1, okay, which indicates that there is a strong presence of buyers at that level. If you are a risk averse trader, then better you can wait for one more confirmation signal and then can go for buying opportunities. Okay, so here you could see, right, since the candle C2 lies inside the real body of candle C1, this is my entry and this is my stop loss. Okay, so this is how one can trade based on the bullish Harami pattern. Now let us try to understand the bearish Harami pattern, friends. Okay, so it is quite opposite to the bullish Harami pattern, whatever we have discussed in that. Let us try to understand some of the important points regarding this pattern. So the first thing, the previous trend should be an uptrend, okay, which indicates that bulls are in absolute control over the market. So here if you see, let's suppose this is a candle C1, okay, and this is a candle C2. So candle C1 should be green, which confirms the bullishness, and candle C2 should be a bearish candle with a small real body. Okay. So if you see here, candle C1 open price is here, and candle C2 open price is this one, right? And if you see, the opening price of candle C2 is lower compared to the previous day's closing price, right? And also here the candle C2 closing price is even higher than the previous day's candle open price. Okay, so which indicates that after an upward rally at this price point, bears entered into the market. Okay, when we see a bearish Rami pattern, we can look for a short opportunities, assuming that there is going to be a trend reversal in the market. Okay, so this is how ideally a bearish Rami pattern. So if I want to take position based on bearish Rami pattern, so my sell price should be the close price of C2, right? At this price point, I can take the trade and keeping my stop loss as highest high between the candle C1 and C2. Okay, so this is how one can take position if we notice a bearish Rami pattern on the chart. Okay, so if we see a bullish Harami pattern, we can look for long opportunities. If we see a bearish Harami pattern on chart, we can look for a short opportunities. So the same thing here, C1 is a bullish candle and C2 is a bearish candle. Okay, at this price point you can take the position keeping the stop loss as the highest high between C1 and C2. Okay, so this is about a bullish and bearish Harami pattern. So if I have any two trading opportunities, one based on engulfing pattern and another based on Harami pattern, so I would be happy to go with engulfing pattern, because engulfing pattern clearly indicates that there is going to be a strong dominance from either the bears or the bulls. So I hope you understood about Harami pattern. And also one more important point, to have some better confirmation on the chart, so it is always advisable to have any other technical indicator along with these patterns. Okay, it could be a moving average, crossovers, or any other technical indicator. Okay, all right, friends. So now we are in TradingView platform. Let us try to figure out the Harami patterns on the chart. Okay, so I have taken Maruti stock. Okay, so I'm using a 1 day time frame. You can see here. So now let us try to figure out. So if you see clearly here, okay, so this is a clearly a Harami pattern, where if you clearly notice, the previous candle is a green candle. Okay, so and also if you can see, the previous couple of trading sessions was in uptrend, right? So here you could see last couple of trading sessions was in upside. Okay, at this price point, let's suppose this is candle C1. Okay, and if you see the green candle, okay, which indicates that the stock is in uptrend, and in the next trading session, if you see there is a bearish candle formation. Okay, the rules of Harami pattern, friends, if we can recall, the previous candle should be a bullish candle and the next candle should be a bearish candle, where the real body of the candle C2 should lies inside the real body of candle C1, correct? So it is clearly satisfying the rules of a Harami pattern, since the previous trend is uptrend and the pattern has formed at the top of an uptrend. So we can clearly say that it is a bearish Harami pattern. Okay, so looking for a short opportunities at this price point. So if consider, if I have a short a Maruti Suzuki at this close price of candle C2, okay, which is around like 9,300, okay, somewhere close to 60. If I have shorted the Maruti at this price point, okay, expecting the market to fall. Okay, so what actually happened, friends, in the next trading sessions? You can see there is a drastic fall. Almost, you could see there is a huge downward rally. Okay, so if we can analyze the risk reward, what is my stop loss, friends, if I would have taken the position? Okay, so the highest of these two candles will be my stop loss. Okay, so if you see somewhere my stop loss is 9,400 and somewhere 75. Okay, and there is no fixed target I can look for, but as long as the market is in downtrend, if there is any reversal, then I can just have my trailing stop loss. Okay, let us try to analyze the return that I might have got if I have taken the position. Okay, let's consider till this price point. This is an amazing downward rally where almost 22%. Okay, so somewhere 22% is not just a simple return, right? Similarly, if you see SL, okay, if I would have taken my position at this price point, my SL is hardly 1%, or 1.5%, correct? So it is almost like 1.5 is to 20, so it is a jackpot kind of thing, right? So let us try to figure out some other patterns. So friends, here is one more pattern. If you see, so the previous trend is a downtrend. Okay, at this level there is a bullish Harami pattern, right? So to form a bullish Harami pattern, let us again recall some of the rules, friends, that we have discussed. The previous trend should be a downward trend. Okay, so if you see the last couple of trading sessions, so we could see the red candles, which clearly indicates that the market is in downtrend at this level, but here onwards you could see, though it is looks like a sideways, but slightly a downward trend, right? So if you see, candle C1 is a red candle, which indicates that the bears are in absolute control. And in the next candle, where if you see there is a bullish candle, okay, which again the real body of candle C2 lies inside the real body of candle C1, correct? So if you clearly notice at this price zone, okay, so the strength of bears has got weakened, and so bulls emerged into the Maruti at this price point. Okay, so when we see a Harami pattern at the bottom of a downward trend, right? If you see here, this is clearly acting as a very strong support because it has reacted at this level, and also here we are expected to see a price action at this level as well, right? So as expected, there is a bullish Harami pattern, expecting the market to go to a higher levels. Okay, so what is my stop loss, friends? Ideally, the lowest low of these two candles will be my stop loss. Okay, so imagine that if I am taken position at the close price of C2, so my stop loss would be around, okay, let me see this way. So my stop loss is around 2%. Okay, now imagine that I'm looking for a target at this level. Okay, uh, because the earlier in in trading sessions, so we have seen that there is a resistance at this zone. Okay, so if I'm looking this as my target, so it is a very good trade, right? So imagine friends, if I'm looking till this level, it is almost 10%, which is a decent trade. Okay, so if by any chance that the stock even getting some resistance at this level and try to break the trend, so I'll trial my stop loss. Okay, but as we can see here, there is no reverse in the trend, right? Yeah, as it has continued till this level. Okay, so almost I might have got like somewhere 12-13%, which is again an amazing trade, right? So here also friends, again one more bullish Harami pattern downtrend. So if you see at this price zone, okay, so it is clearly indicative that earlier we have seen some consolidation at this price level, and even in the previous trading sessions here there is, it acted as a resistance. So we can interpret that this level is going to be a support. Okay, so as expected, so there is a bullish Rami pattern. If you see, the previous three trading sessions was in under the selling pressure. Okay, at this price level there is again a bullish Rami pattern. So this green candle, which indicates that there is entry from buyers and we can expect the market to go higher levels. So ideally I can expect this as my target, since already we have seen some resistance at this price zone. Okay, so which is again a good decent trade, right? So consider this as my entry, and almost I've got like somewhere 6%. So friends, here also if you can see, the previous trend is in downtrend. Okay, and at this price zone, here we could see a bullish Harami pattern. We can expect friends, so always try to find these patterns at the bottom of an downtrend or uptrend, and especially at the support zones or the resistance levels. Okay, so if you could see here, the earlier we have seen a strong support at this zone, so we could expect again support at this level. So the market has been in downtrend. Okay, so in couple of sessions, and at this support line we could see that there is a bullish candle up after the downward rally, right? So this bullish candle indicates that there is a strong entry from buyers. Okay, so let's suppose if I'm a risk averse trader, maybe I would have waited for another strong signal that confirms entry from buyers. Okay, so now let us consider that I'm a risk averse trader and I have waited for one more confirmation signal. So here I have seen another trading session where a bullish candle formation, right? So at the closing price of the next trading session, so I'll try to take a long position at the close price of C2. Okay, and I can expect some upside rally. So here it is a decent trade if I'm looking till this level, which is almost like 8%, right? Considering that the stock has already reacted at this level. Okay, so 8% is a decent trade. Now, what is the stop loss of a bullish Harami pattern, friends? It is the lowest low of the pattern. So this is how we can analyze looking at bullish Rami pattern and bearish Rami pattern on the chart. So always try to find the patterns at the support level or at the resistance level. So a taking trade is completely depends on the risk appetite of a trader. Okay, if you find a bullish Rami pattern, one can look for long opportunities. If you find a bearish Harami pattern at the top end of an uptrend, then one can look for a short opportunities. So that's all about Harami pattern, friends. So I hope you understood. Thank you.